Welcome out to our halftime report here on a Friday, 10/19/2018. What a wonderful, volatile, fun couple of weeks in the market, Matt, starting off earnings season. And we're starting to get some clarity about market direction, but I would not say anywhere near complete clarity. How you doing this morning, Matt?
I would say there's absolutely zero clarity as of right now, actually, to be to be
To be
honest.
fair.
Yeah, to be
Well,
fair. There's so many variables that could drive this market one way or the other. It's obviously it's to be caution and whatnot, but we'll look into the charts here in a second.
I guess the one thing we do know is, we can 2 days after that big sell-off, the market still does exist. So, guys, remember, the market will always open up, at some point and keep trading and keep working and whatnot. A lot of interesting things in the market today, Matt. We're sitting on the 200 period moving average. I've always felt like that 2,800 level on the S&P is kind of like a magnet. When it sells up towards it, it sells off, comes back and forth. I have no read on now till the end of the day, which is why I've kind of stopped my day trading for the day, and I'm going to focus on prep and management and all that other thing. What's your read on the S&P?
Well, the read on the S&P is it's mixed, Tim. That's what it is. You got buy signals, you got sell signals, and I was thinking about this today. Back when I was a young man and I was learning how to be a lawyer and all that jazz, and I went to law school, and you'd always want to learn how to take the opposite side of the equation, understand your opponent's argument better than you even understand your own. And in my own head earlier today, I was trying to make the bull case, right? And then simultaneously, 5 minutes later, I'd make the bear case. And both the bull case was very compelling and the bear case was very compelling. And so I couldn't decide which one I wanted to take. But the simple reality is you got mixed signals on the intraday chart. You got mixed signals on the daily chart. It's not the opening of the marketplace. That is not the important factor in this marketplace. It is the last hour of the trading day. And as you're coming into the last part of the weekend, the week here, Friday, midday, the market's going to close here in a few hours. Every market shuts down: the currency market, the commodity market, the stock market, the options market, the bond market. Every market shuts down at 4 p.m. Eastern Standard Time or 5 p.m. Eastern Standard Time on Friday, and they don't open up back until Sunday. And because of the mixed reading in the market, I have not felt comfortable in the last few weeks carrying anything aggressive, positive or negative delta coming into the weekend. I think it's appropriate to have a neutral delta right now until we start to see some of this volatility shake out. I mean, just today, Tim, you had very positive earnings news today. Very positive earnings news today. A couple earnings announcements that were better than expected. PG, Procter & Gamble, Honeywell, Schlumberger, American Express, Intuitive Surgical. All of these companies reported positive earnings. We've had positive earnings throughout this week in the marketplace. And what's the market done this week, Tim? The market literally has hardly done anything this week. I mean, yeah, it's had crazy volatility during the day, during the actual trading days. But if you look at from just a Monday to Friday type close type situation, Tim, you see a doji. I mean, that's what you're seeing there. Is you're seeing a doji. And I think because of that, on that weekly chart, that might give the bulls some of the reprieve that they've been looking for to maybe come back into the market. But from a position trading perspective or an investor perspective, I don't think you can do anything from a buying perspective until you get back above this weekly high at about 28.25. Until then, I think you're sitting on the sidelines from a position trader or an investor perspective. Swing trades, you got to be cautious with those right now. And again, I do not think carrying anything aggressively into the weekend is going to be is wise. Intraday speaking, Tim, on the S&P 500, it opened
Go back
up
to the weekly for a second. I got one thought before you go to the intraday. So on your doji on the weekly, obviously that is a much lighter candlestick than the one before. What's interesting about that, Matt, I did a little 2-minute tutorial video the other day on how to read candlesticks. There's only 5 data points: the OHLCR, right? Open, high, low, close, and the range.
Mm-hmm.
Even on that doji, it's got a 79-point range. The typical ATR on the week for the ES is 59. So it's a dojiing now in the market still is enough to get your day trading active, because you're having plenty of up and down.
It's been a really good week for a day trader's perspective. I mean, it really has. But outside of that, Tim, I mean, swing trades, there's some good swing trades out there, but you got to be very, very, you have to have your timing right on the trigger. That's what you have
You
to
have to be
have.
disciplined.
You have to be
You
disciplined.
have to
You
have good
have
money management.
absolutely position sizing, but the timing on the trigger is so important on those swing trades. You can't be 2-3 days late on a swing trade right now. You just can't. If you're 2-3 days late on a swing trade, you got to wait for the next setup.
Well, first of all, I've always said if you're 2 or 3 days late on a swing trade, you're not a swing trader. Okay, you're a position trader. All
It's
right.
true.
I mean,
But in a bipolar market that we're seeing here this week and over the course of the last few weeks, it's even more important, Tim. Those triggers have to be on point.
I agree. And we're going to talk triggers today here, guys. In fact, we're going to go back to last week's option report later in the show, and we're going to go through and look at all the triggers.
That is the Friday Fun Day teaching technique this week, is how to use those reports to trigger and when to trigger.
How to pull the trigger like the Dolphins did. This is the last day I'm wearing this hat, by the way. I'm giving it back to you. I bought it brand new on Monday. It is now going to be a gift to Matt. I think that's the finality of this this
That
bet,
hat
right?
will never be worn by me.
That's a good. I mean, look at this good looking hat.
That is a terrible, terrible hat.
I'll give it to Goodwill or something.
Yeah, give it to somebody else.
Yeah. Would a homeless guy wear this hat? That's a good question. I don't know.
No,
Halftime crew. We'll have to find out. ES Dojing here. Let's go and break down every different index here, Matt. You know, there was some news out of China overnight, and I'll tell you.
Before we do the Chinese story real quick,
Sure.
I think it's important. Interday, we are selling interday. And that's going to be very, very important to watch this coming into the close here, Tim. This was the opening of the market. Positive news coming out of earnings, but then you had no follow through up here as it gets into those interday resistance channels at 2,800. And it's exactly what you said, Tim. 2,800 is really, really key for the market here. It's acted as support and resistance interday for the last week. Strong positive movement coming into the open of the market. Now, that open was not just earnings related, Tim. That open was obviously part of the Chinese situation as well. And I want you to talk about that, what's happening in China right now.
Well, obviously, there's a thing in the market we call being priced in, and some of the information is not priced in yet, Matt. They released their GDP number, and from the reading that I saw and the data that I saw, it came in at 6.5%. Which you might be thinking, guys, well, in the U.S., our GDP was 4%, and President Trump was ringing the victory bell, right? Well, that's because we have a different economy and we have a different standard of what we can and cannot grow at. Maybe that
in
the future.
We're also much bigger still.
Bigger, yeah.
And because we're much bigger, it's harder to grow a massive economy. The Chinese economy is a $12 trillion economy. We are a $20 trillion economy, and the Chinese economy is still kind of going through an economic stage that we went through 70 years ago, right? Yeah. So you're comparing apples to oranges there. A 3% GDP in the U.S. is far better than a 6.5% GDP in China.
Correct. So, and giving context to that number, I think helps us understand this because, for so long, Matt, their GDP number was 8, 9, 10%, They had double-digit GDP numbers at certain points, and this reading was the lowest growth reading since 2009. So all of that negativity built into what's going on with the Chinese market, and you come in and you're looking for a reason, and you're like, okay, trade war, tariffs, we're going into the weekend. The market has not reacted well since about 9 o'clock this morning.
No, it hasn't. But again, that was a lot of intraday just trading going on. And I think that a lot of that is the traders not wanting to carry a strong bullish bias coming into the weekend. The Chinese data, the GDP data was highly negative, Tim. And I want to speak to that because we saw this same type of situation happen on August 7th of 2015, Tim, when the Chinese came out. They were expecting somewhere around 7.8% growth, came in underneath that level, and the U.S. marketplace went down about 10%. It went down 8% overnight from Sunday to Monday. It was down 10% from peak to trough in a very short time frame. We had the same type of situation happen here, but the Chinese market responded positively off that news, and the U.S. Open responded positively off that news, not because of the negative GDP data coming out of China, but because of the hopeful, and this is something that drives me crazy, this version of capitalism to a certain extent, where basically we say, okay, good news is bad news and bad news is good news. But because if the Chinese economy is shrinking, the People's Bank of China will come in and stimulate the marketplace. And so because the People's Bank of China came in and said they will continue to stimulate the marketplace, the Chinese data came in as positive. But I'm not buying that. I'm not buying that economic reason in any capacity here. I'm focused on the intraday chart here. 2800 is key. It's selling intraday. It's going to be very important next 2 hours in the market.
Well, we had a sharp sell-off yesterday when it unwound, Matt. And even, you look at yesterday's pivot and candlestick, even after the halftime report, that was a pretty, precipitous sell-off there. Obviously, at very, very important levels here. From a psychological standpoint, not just the trend, Matt, you are right at break even. And a lot of traders, I mean, they watch the red and the green, and the heat maps are now going red here intraday, and a lot of companies are selling off. Bunch of stocks on the S&P that I do want to get to and talk about at some point. One of them is Procter & Gamble, who had earnings, largest market cap consumer staple type company out there that did report today. Others that are more interesting, PG, earnings were fine. I looked at the revenue, the earnings numbers.
Any blowout earnings out of those, but they were fine. They were fine. The earnings that we might want to talk about here is
PayPal as well.
PayPal obviously selling off intraday as well, like a lot is, but it had a very positive earnings. And Venmo, which I don't use Venmo. How many of you guys use Venmo out there for the halftime crew? Do you guys use Venmo? I'm not sure because I don't use Venmo, but my wife does, and my wife loves Venmo. Absolutely loves it. And that looks like a profitable arm of PayPal now. So it's going to be interesting to see how PayPal reacts now that it's above its 200-day moving average. I'm keeping an eye on PayPal over the next couple of days, Tim. If it holds above 82, that might be something to look at.
Well, and also, by the way, this is a post-earnings volatility type play. I do like it as well, Matt. After the gap of an earnings, and we talked about it with Netflix the other day, I find that Netflix trade to be fascinating, and I loved bringing it up. It's not usually the kind of thing we do, but Netflix has gone down from where we entered, Matt, and I've been profitable on my position, because of management, adding the bear call and all that kind of stuff. It's interesting how this volatility stuff works if you learn how to do it. I'm with you on PayPal. I actually think there might be a trade on PayPal today, but I am not pulling the trigger into market.
I don't think you can come into it today. I think you got to give it until Monday or
might
Tuesday.
be a Monday
deal. The market will respond to it over the weekend.
I've got it on my radar as well, though. But PayPal, interesting. One of my favorite stocks had earnings last night. Schlumberger, one of my favorites. The old dirty burger, and downtrend, bearish sector in many, many regards, but actually did come in with a positive result there. Honeywell also had earnings.
Schlumberger, what was interesting out of Schlumberger's earnings report, Tim, is the report was fine, but they had a very severe, I don't want to say severe, they had a warning about slowing U.S. growth because of the tariffs. And that's something that I was really kind of focusing on coming into this earnings, how many companies would trigger that excuse. And I call it an excuse, but it's legit, but would trigger that as something to be concerned about. And Schlumberger is concerned about it, and so am I.
One byproduct of the PayPal earnings, which is really fascinating, biggest loser in the S&P 500 today is eBay. Bring up eBay's chart if you would. Down almost 9.7% and getting just absolutely destroyed. Non-earnings, by the way. PayPal came out and just said light volume and light consumer behavior towards their eBay processing and all that kind of stuff. PayPal's earnings drops eBay. You wouldn't have expected it, but man.
Say that again. What was the reason?
Well, from what I read, and I'm looking at some headlines right now as well, they're down 9.7%. They're selling intraday aggressively, getting pounded. PayPal's gain is eBay's pain midday. eBay stock falls after PayPal suggests weak volume trends at the former parent. So PayPal must have had something to say about eBay and their trending, consumer data.
Well, eBay's a fine company. I don't want to say anything, but you should have been out of this company a very long time ago if you were an investor. It broke its 200-day moving average. It's been a consistent bearish trend for months and months and months. I don't know. I mean, a gap of 10% a week before earnings is highly, highly negative here.
Yeah, that's brutal. But it has been bearish. The reality is, look at those moving averages, Matt. They have been falling now for 6 months.
Oh, it's been kissing its 20 and its 50 for a month now. I mean, it's been bearish. But again, when you see these pre-earnings gaps, Tim, those are almost always highly negative. And it's like our good friend Keith says, right? Never just happens once. Watch
It
that second
doesn't.
one.
They're
Well,
like
look at
cockroaches.
gap. I mean, it's this thing's extremely bearish, -3 bearish.
Yeah, and let's move on to the Dow Jones Industrial, if you would. Large cap, mega cap companies have had relative strength. It's not quite on the 200 MA. It's still got a green candle here today, Matt, but very similar pricing action to the S&P. What's your read on the Dow? Where do you got support and resistance? What are the key levels for you?
Again, it's the 200-day moving average for me. I mean,
Mhm.
everything else is intraday. Okay, so on the daily chart, it is the 200-day moving average. Intraday speaking, if you're looking at potentially, triggering into swing trades if it goes up above resistance or it goes down below support, you're looking at the high of today, Tim, is where you're looking at the intraday resistance levels. So between 25,545 and 25 that would be 25,600. So in that 60-point range up here, you'd have to trigger above those levels. So I would say 25,600 on the intraday resistance level. You got a pretty good little support level right here where the market currently is, about 25,400 though. So keep an eye on the Dow at 25,400. If it breaks that, you could see a repeat of what we saw a couple days ago on Wednesday.
Biggest losers on the Dow today: Intel, DuPont, Caterpillar, Nike. Biggest gainers: Procter and Gamble, American Express, AXP up 3%. Actually, very, very
Post
strong.
earnings.
Yeah, post earnings. Walt Disney looking good. Coca-Cola, Pfizer all up as well. PG is the big gainer there.
Well,
Obviously,
AXP has been a great company for a long time.
I like
Okay.
it. Yeah.
Yeah, great company for a long time. Keep an eye on these moving averages. Okay. A close above those two moving averages right there would be a bullish signal, no doubt about that. I haven't looked at Disney for a little bit here,
Break it
Tim, and
out.
I regret not looking at Disney for a little bit. Look at that break out of resistance, not breaking out yet. I wouldn't buy the breakout here, Tim, just because you know me. I don't like running after I've already ran a lot. You've already ran a lot here. Okay. Take a
You could have
break.
stopped that sentence at "I don't like running."
After I ran a lot. You know what I mean?
I don't like running.
I don't like running, but when I do, I run fast. Okay. So in terms of that though, what I mean by that is as a stock has already ran too far, too fast, as it gets into resistance, a lot of times those breakouts fell. They come back down into support, form a cup and handle pattern, and then break out again. Disney, get it on a watch list. It might not be in the next week, Tim. It might take a week or two to kind of let that formation form in the cup and handle. But a breakout after a cup and handle, especially what the market's been doing, that's really good. Disney,
Let's talk.
get it on a watch list.
I agree with that. Let's talk tech here for a minute. NQ, if you would. NASDAQ for me, 7,200 is everything. I actually been talking about it pretty much every day. It will rally to 7,200 intraday and then sell, and then it will break 7,200 and run, and then it will come back to 7,200. It's like a magnet here, Matt.
Mm-hmm.
Sitting on the 200-day moving average. When it broke below 7,200, it quickly dropped about 1% here intraday. That's not a real, I mean, it's not like we're crashing here today, obviously. It's not like we're having a high volatility sell-off. Just some selling here into the Friday. And that does make sense with all the risk we've seen in the market lately, Matt. Traders probably want to get out before the weekend, don't you think?
What did I say earlier?
Yeah.
I don't think you should carry a positive delta coming into the weekend. I could be wrong. I don't care. I've been around the market for a very long time, and there's so many variables that could trigger something from, especially right now, geopolitically. I mean, so many things can happen with the Saudi Arabia situation, with the Italian situation, with the Chinese situation, and that's just to name a few out there, and that doesn't have anything to do with the U.S. But no, I wouldn't feel comfortable carrying a strong delta one way or the other.
Exactly. I'm looking for delta neutral and hedging and caution. It's been a
my
good
entire
week.
philosophy, Tim, is buy strength, sell weakness. Carry a neutral delta, buy strength, sell weakness. That's my entire philosophy right now.
Yeah. My entire philosophy is growth. That every day you wake up and you approach the market with discipline, you do the best you can, you understand it, you avoid risk when you can. And I think that's one of the reasons why people are going to take off like you did for the weekend and say, hey, listen, I'm not carrying delta into the weekend. I want to come in on Monday and reassess when there's a fresh market and new data.
I'm going to tell you exactly what I'm going to do, Tim.
Yeah.
At 11:30, in 40 minutes from now, I'm going to go walk outside to my truck, and I'm going to get in my truck, and I'm going to pull my trailer down to the desert. And for the next 2 days, I'm going to go get in peace with my inner trading self. And I'm going to come back fresh on Sunday, watch the Miami Dolphins play, watch the futures in the Forex market open up on Sunday. And I'm going to go start making some more trades then.
You know, the difference between Wall Street and us is they go to the Hamptons. We go to the desert.
Yeah.
It is. Believe me, they are missing out. Come to the Utah desert. You will find yourself. There's no doubt about it.
Sip on your wine and cheese over there in the Hamptons. I'm going to go shoot some guns and ride some horses and be a man for 2 days.
You couldn't even load a gun. What the hell are you talking?
Are you kidding me? Are you kidding me? Oh, I go shooting at least once a month.
Oh, bring up Smith and Wesson Holdings. I want to take a look at SWHC. We're talking guns here today, I guess. See if there's a trade on Smith and Wesson.
Didn't Smith and Wesson get bought out?
It might have. I haven't traded it
forever. Like 2 years ago. What are you talking about?
Smith and when's the last time I traded? It's been years. Anyway, all right. I don't even know a gun manufacturer who's publicly traded.
It was 2 years ago when Smith and Wesson merged and got bought out.
Noah is. I seen the coach Noah in the chat. Noah, who's a good gun manufacturer that trades publicly? Give me a shout out there in the chat, and we'll go from there. Shooting his mouth.
Shooting his mouth.
All right.
I have been accused of shooting my mouth a few different times in my life there, Noah.
Some active stocks on the NASDAQ, Matt. Obviously, PayPal, we talked about, is one of the bigger gainers. eBay, NVIDIA, Tesla. Bring up Tesla if you would. That was a significant breakdown, but it's not quite broken down of the major levels, which we've talked about. 250 is in play here, Matt. Now, they've got earnings in a couple of weeks. But I got to tell you, I've been watching this company every day for so long. If it breaks 250, that thing could absolutely get destroyed. And it is a psychological level. It is a key level. It is not an entry point today. We're sitting at 255. Even if it triggered today, I would not take the trade into a Friday.
But Elon Musk just announced the new $45,000 version of his Tesla sedan. That doesn't get your blood going.
I don't care. I am so over listening to Elon's fluff until I see more clarity on where the company's going. The automakers have been destroyed for a long time. Tesla has poor fundamentals at this point, and a lot of those.
This goes back to your trigger conversation, Tim.
Yeah,
we've been waiting for Tesla to break 250 for a week and a half. We're still waiting. You don't fight that. You don't chase the dragon. Let it come to you. When it triggers, you go.
That's right. And one stock I do want to also look at is Intel on the Tackle 25 in the conversation to technology here. Seems like whenever China sells or has weakness, Intel sells.
Well, Intel does a
lot of makers sell, internationally as well. Breaking down, Matt, you got earnings next week. I would not take a swing trade into that tight of an earnings, but it's not been a great performer. And this is not what we were looking for. About a month ago, Intel looked like it was putting in a new pivot high and the trend was going to come back up. But look at how it hit the 200 moving average. It failed. Red candles came in, and now we're sitting here at support. Not a great chart there as well. FANG stocks, Facebook, Apple, Amazon, Netflix, Google, all of them very, very interesting. Apple's holding.
Let's take a quick look at those five because they're so important. So let's go down. Let's go Facebook, Tim. Obviously, both of us are in short side here on Facebook, Tim. A little bit of a slowing momentum candle here. You gonna do anything about Facebook?
I have a swing trade on, and I have a plan in place. There's nothing about the information today that would make me come off of that. And no.
Good. Okay. Me either.
Yeah.
Next one, Apple. I'm long Apple here, Tim.
I am as well.
The reason I'm long Apple is only one reason, and that's because you told me to get some positive delta to offset my negative delta. Right?
It's the only thing I can believe in. All right. Listen.
Yeah. Listen, I get it. Don't get me wrong. I like it. Okay. It's doing me good today, but keep an eye on those moving averages. Okay. If it can get above that 20-day moving average, Tim, you could see quick price appreciation to 230.
Yeah. Okay? But if it doesn't break below 215,
it's going to be a fight. It's going to be a fight there. Okay. But if you're not, I'm only into Apple to hedge bearish delta. That's the only reason I'm into Apple. Mm-hmm. But it's a trigger for me on a trade if it gets above that 20-day moving average.
It's an ugly chart, actually. Now, the more I look at it, it looks like a triangle.
There's a ton of ugly charts out there. You can't find a great bullish chart.
Apple is more of I need positive delta to balance my portfolio, and it's one of the only companies. If the market goes up, Apple will go up, right? It is just the way that it is. So you're almost just hedging with the strength in the market, relative strength-wise. Look at Amazon. Amazon, I would not buy. There's
Oh,
no chance.
no.
This chart is in no man's land. I'm currently neutral. I would not take a bullish or bearish position in between all of this moving average congestion, Matt. There's nothing there for me. But I do not like that chart. That is a lower pivot low, lower pivot high. That's a problem for this market if that continues to sell.
You could theta this. There's no doubt. You can cash flow, bear calls, bull puts, those types of things. But when you're in between a rising 200 and depressing 20 and 50-day moving averages, Tim, you got to treat that like a symmetrical triangle. That's how you got to treat that. And when you're looking at it as like a symmetrical triangle, it's not a symmetrical triangle, but you got to treat it that way. And you got to wait for it to break out one way or the other to trade directionally on that. And Amazon is a textbook problem for the market right now, because the entire market looks like Amazon. Even you take the healthcare sector for example, for a second. We have loved the healthcare sector all year long, but now that you're breaking those moving averages and you're seeing the same thing kind of happen here, there's no trade here. There's a lot of weakness there, and that's my biggest concern about the market is where's these triggers on the upside. You got to be patient and wait for these trends and these patterns to set up, because they're just not setting up right now.
Yeah. And by the way, technicals do not always win every fight. I will say this, fundamentals could come in and actually dictate and drive these things higher if earnings do come in. That's why you got to hedge, Matt. The charts are not strong right now. The charts are actually probably pointing to a more bearish bias than we're even taking on, because most of the time when you have a sharp sell-off, it will come back and retest highs over the next short period of time.
Okay.
And so there is upside.
Fundamentals will win long-term. And what I mean by that is decades. Okay. Fundamentals win long-term. Technicals win short-term.
Yep. 100%. And Netflix is another one of these that we're talking about. Netflix, obviously, part of the FANG stocks, part of the FANG discussion, just neutral. I mean, who knows? You take your pick, guys. I like the earnings, but it didn't break above 380. Until you break 380, you don't have any kind of bullish confirmation. I like the volatility sell, but here we are in the middle of a range. I actually went neutral on this by doing a condor after the bull put. It's neutral chart. You can't bet on Netflix right here. That there's nothing in the chart that tells you to. And then Google, if you look at Google, I think Google is one of the weakest charts in the market, from the big ones. Not necessarily, there are weaker charts, but out of these major companies, Google is below the 200 moving average on a pivot.
The weakest.
It's ugly.
Well,
it's flat ugly.
It's an argument. Facebook's the weakest. Google's second.
Yeah.
Facebook's the weakest.
Hey, I got no problem with that. I am short Facebook. So as I look through the FANG stocks, I wrote the daily email today for Tackle Trading. And by the way, I hope you guys are reading those and, digesting some of that content and information. The FANG stocks are not set up very beautifully on their charts, Matt. And they got earnings coming up next week. Out of all the stocks we just looked at, Netflix, the only one that has already had earnings. So the market has a lot of information, a lot of news right in front of it.
Those are going to be big earnings coming up. Those are massive. Or next week, Apple, Amazon, Google. I mean, those are a big week in earnings. It's going to be a fun ride. It's just going to be it's not a Disney roller coaster. It's a Six Flags roller coaster next week.
Yeah, I agree with that as well. All right, guys. And I do want to look at the commodity market and the currency markets a little bit here, Matt. I know you're doing the Forex report over the weekend. Dollar hit its head, fell off, just kind of churning around that 95, 96 mark.
Yeah, 96.
Yeah.
I mean, it hit resistance, 96, sold off. I don't give any reason outside of that. A close above 96 is a strong buy for me.
I agree. Higher pivot low, equal pivot high, kind of a developing short-term triangle.
By the way, I'm already long dollar. Okay.
Yeah.
So let me put that disclaimer out there. I'm already long dollar, but a break above 96, I would go aggressive bullish on it.
Yeah, gotcha. Crude oil, gold, silver, natural gas. Let's take a rundown on the commodities markets a little bit here. Gold continuing to show strength. Now, it's not going to have those big 2-3% days like some other products.
I don't care. I am taking the high base as a very, very positive signal.
I agree. The fact that it did not come back this week and it held the gains that it made last week is a very good thing for gold's trend. It needs to have those moving averages catch up a little bit, or we need to break out and run to another leg higher. But I do like the action there on gold. I'm slightly bullish.
I am as well. Technically speaking, a new trigger would probably be above 1236 to 1240, just depending on how aggressive versus conservative you wanted to get into it. I love the price action up today, even though it's only up 40 cents. I love that it's held. I love that it's been able to be held up in a volatile condition. It gives me a little bit of belief that gold is still acting a little bit as a safe haven out there. And no, for anybody that says Bitcoin is the new digital gold, get the hell out of here. It is absolutely not. It is a precious metal that protects currency. So I love the price action here. Technically speaking, 1260 would be the next level of resistance, followed by that right about that 200-day moving average at 1280. I expect gold to perform neutral to bullish over the course of the next month or so.
Silver, crude, and then nat gas. Run through all these commodities here. Silver about to break out.
I blame you and Cody for me not buying silver yesterday. I blame
Well,
you guys.
All right. How much is it up today? A nickel?
It's up 35. It's up 0.35, 0.5 cents. Yeah,
I'm going to quote something my coach has said many, many times. If you liked it at the price yesterday, you should like it at the price today. If you can buy silver at 1460,
I don't know who told you that. I don't know who your mentor was. He was obviously not very intelligent.
Hey, listen, I play triggers. I play confirmation. I need confirmation above 15.
Mind you, I was Cody's mentor just to.
I know.
Okay.
To clarify, he was giving you a little bit of a hard time there. Crude oil, natural gas, Matt. I like silver above 15 still. I think it's a pretty simple call.
Okay, I do too.
You can buy silver anytime, Matt. Yes, you can buy silver any day.
let me make my argument. A close above 1475 would be an appropriate trigger too. You haven't had a close above that. Obviously, it's tested above 1475, but a close would be there as well.
I'll make you an offer. I'll either give you one silver eagle or this hat.
First of all, I'm not wearing that hat. That hat is ugly. I wouldn't be caught dead in public in that hat. I can't believe you wore it this week. That was such a terrible bet by you. I get to wear a Chicago hat if I win. Chicago hats are great. You have to wear a Miami hat. Yeah. But no, I'll take the silver eagle.
Well, I mean, who has more fun than we do, Matt? If the worst part of my week is I got to wear this ugly hat, I think I'm doing all right in my life.
Yes, I think we should, let's celebrate the fact that you had the courage to wear that hat for an entire week on a live
Get out of here.
Public YouTube show. So
maybe after we talk markets, we can sit and chatter about the Dolphins. Crude oil and natural gas next. And CL. Kind of churning down here, Matt. I'm neutral until I see some strength. I understand the bullish argument. I understand the bullish case. I'm bullish in commodities in general. I like the idea of going long crude oil. You can't love those last three candles, though. Today, it is recovering some, but you are in a technical no man's land, to be fair to that price, right?
Like I said yesterday, I took the trigger 2 days ago. It's a position trade for me. I'm not going to freak out. If it closes above the 200-day moving average, I'm going to get out. That's my plan.
And then nat gas is last.
Quickly though, intraday, both yesterday and today on crude oil, $70 was acting as intraday resistance level. If it gets up above that, you could see some price appreciation. Natty gas here.
M pattern on the daily, but I think that's just noise, quite frankly. I do see a high base and I see upward movement. There's nothing to buy here until you break. Mm-hmm. But I got a question. If you break 3.32 or whatever that is, would you go long up there?
Yeah, break out of those 3.3 level. Yeah,
I think
I'm going to short natty gas. How I treat natty gas, I sell credit spreads on it.
I agree. All right, guys, that has been our market skyline. We are at the halftime of the halftime report. And like I do each and every day, we've got 11 thumbs up. I want everybody to give me a quick thumbs up. Help us get the word out there.
We beg for thumbs up, guys. Let's go. What are we doing here?
Well,
Tim, I got a couple questions for you before we get into.
No, I'm not going to beg for a thumbs up. Give me a thumbs up if you enjoy the show. All right.
Oh, that's a beg. That is a beg when you're doing.
It's not a beg. It's a reminder. There's a difference.
Okay, very quickly. Something fun today. Okay, and I want everybody to answer this before we get into the triggering we're going to talk about. Tim, Cody put this in the thing. He has 3 questions. I want to see if you can get all 3 right. Okay. Fill in the blank. On Wednesday, Canada became the first major economy to do what?
Legalized pot.
Good. This week, IBM launched the X-Force Command Cyber Tactical Operations Center. It's aimed at helping companies train and respond to cyber attacks. But what is it? Is it a truck, a sub, a Victorian mansion, or a satellite? Can I give you a hint?
No, you can. Hold on. If I think submarine, I think like Hunt for Red October. If I think Victorian mansion, it's like the X-Men mansion. Is that what I've got? Like
Okay.
Professor X somewhere. I'm going to go with Victorian mansion. Just a wild guess.
Let me give you a hint. Okay. Have you ever seen Universal Soldier with Jean-Claude Van Damme, whatever his name is?
Jean-Claude Van Damme.
Yeah. Have you ever seen Universal Soldier?
I have to tell you, I can't remember a single Jean-Claude.
Oh my goodness. It's a truck, dude.
Was he in a truck?
And I'm telling you, the picture of it reminds me of Universal Soldier. Last question. You're 1 for 2. Last question. What does the acronym JOLTS, JOTLS, stand for? There's no way you're getting this one. It's an economic thing.
Just outside left field ticket stand.
That's great.
All right, I don't know.
No. Job opening labor turnover survey.
Hey, maybe I got baseball on the mind. It is going to be the World Series here shortly. They're very cool, Cody. Great job. I like those quiz. So Van Damage. Yeah.
You got to see that truck, though. That truck is Universal Soldier. I think
I have a feeling his movies probably don't hold up, right? They didn't really hold up even when they came out. Are you a Van?
I got to hop in real quick and give credit to Morning Brew for those questions. I'm not going to steal them.
Oh, is Morning Brew where you got that quiz?
Thanks, Morning Brew. You did a great job. That's a good quiz.
All right.
Let's move on to triggers, Tim.
Well, and the thing I wanted to talk about here on the back half of our show, Matt, and it's Friday fun day. We're getting ready for the weekend. We're getting ready to prep the weekend. A big part of my Friday, guys, is the option report and the stock report and the commodity report and the Forex report. Because right after the bell, we're going to get the coaches together and spend a couple of hours talking about the picks for the next week. Now, here's the thing, guys. The whole purpose of a pick list is to give you ideas. You have to execute those ideas within your system, and we always say that. But I want to show you what you should have been doing last week, because they're not all going to set up on Monday, Matt, and actually triggering and trading plans. They might set up throughout the entire week. You never know. So I want you to teach, as we go through these stocks one at a time, the concept of triggers and the importance of a trading plan as a swing trader.
Well, first and foremost, Tim, as those New York traders are going to the Hamptons, this is you right here. That's you. That's why we love Utah right there. What was that? About a 2.5-foot tiger muskie?
Well, let me think now. No, it was more like 3.5, 4 feet. Yeah, it's 44 inches. Yeah. Yeah, it was a big tiger muskie.
Now, in terms of this, guys, for the pro members, halftime crew, you guys already know this. We put out those scouting reports every single week. We put them out on Saturday. You got 4 reports: stock, options, commodities, and the Forex report. And this is basically our watch list, that the stocks, the options, the commodities, whatever we're looking at potentially trading that week. And we look at trends, patterns, support, resistance. We talk about triggers, where the trigger would be. We usually get, we never give one trigger, because there's never just one trigger. There's never just one stop loss technique. There's multiples. There's aggressive versus conservative. So when we look at these, and then you got the things here. Now, what we're looking at, ladies and gentlemen, is we're looking at the options report from last week. Okay, so these stocks are things that we're looking to make option trades on at some point in the next week. Now, a lot of times when we put them on the list, we have a specific trigger in mind, but then as the market adjusts, we have to adjust with that as well. So I'm going to go through the bull list first, and then I'm going to go through the bear list, and we're going to talk about where that trigger was, when we should have taken the trigger versus when we should have kind of came off that trigger. And I'm going to just get the symbols here and then go look at them in toss there, Tim. ConocoPhillips, Helmerich & Payne, MKC, the CME Group, Eli Lilly, Cigna, and PCG. Okay, so these are our bull stocks here, and then we add the charts here. And Tim, we get the charts from, I believe, TraderView, or right? We get those charts from TraderView.
Yeah, that widget we plug in with
with
TradingView. Mm-hmm.
Okay, so you can look at the charts here just very quickly on the reports and so on and so forth. But I like to do my actual prep here in Thinkorswim. So,
well, and one thing I would always recommend for everybody is once you pull a list like Matt just did, create a watch list.
yeah.
Absolutely.
And if you don't know how to create a watch list, just click on that, create watch list, and then bull options report.
Mm-hmm.
And then you can copy paste, but COP, and then you got Hummer campaign,
Mm-hmm.
then we got MKC. Remember that one time we were in a coach's show and I was trying to copy paste like 20 symbols? Yeah, that one was fun.
Yeah, that's fun.
Yeah, that one was fun. PCG, and then you just kind of go save, and there it is. Now, first one here is on Cigna Group. Now, obviously, these are bullish picks here. Now, here's when 1, 2, 3, 4, 5. Okay, so here's when we put the report together. The market's coming down in between two rising moving averages. Now, Tim, the standard trigger on a retracement is 10% of the ATR above the high, correct?
Correct.
That's the standard trigger on a retracement. 10% of the ATR above the high. Now, typically, you want to wait for it to slow down upward movement in price. There's an aggressive and a conservative way to do this. An aggressive trader would say, okay, I love the retracement here. I'm going to put that order in 10% of the ATR above the high right there. Okay, so I'm going to put the order 10% of the ATR above that level, and if it gets me into the trade, it gets me into the trade. That's an aggressive way to enter into the trade. Now, the next day, if you were aggressive, you're like, wow, that was fantastic. I'm making some money. That's beautiful. Love that setup, right? Boom, it worked out fantastic. Now, the conservative trader, ladies and gentlemen, would wait for what's called the confirmation candle. And the confirmation candle is the candle closing above the previous day. So you would wait for the next day, and then you say, okay, I'm going to wait. I'm going to put the trigger in 10% of the ATR above the high there. But the problem on this one, Tim, was at that point, because of the strength of the movement on the 16th, you could not have made that trade at that point because you're so close to the 215 resistance area. Now, guys, does that make sense what I just taught you guys? That you could have triggered aggressively here if you are an aggressive trader with the 10%, but you couldn't have done it on this day because you were too close to resistance. All right. So that's kind of what you're looking at here. Now, Tim, Cigna goes back up, kisses 215. Now, if you're not into that trade, Tim, okay, if you're not into that trade, Cigna might go on the report again this week. Would you agree?
If you haven't traded it yet, if it breaks above 215, it's a new trigger.
And that's probably even a better trigger than the one off the retracement. So if you miss that aggressive entry into the stock off the retracement on Monday, then you're too close to resistance. You got to wait for it to break out. And so now your trigger would be above that breakout channel. Now, the rule for me is 50%, 25 to 50% of the ATR above that resistance channel, which would put my order to get into it up above these levels of resistance right there, Tim. So again, if you miss that aggressive entry, and if the conservative entry is too close to the resistance channel, just wait for the breakout. Okay, it's a dance. Step 1, step 2, step 3. You got an aggressive entry, conservative entry. If you miss the run, wait for the breakout. So that's the thing on Cigna. Here on ConocoPhillips, I still like here, Tim. Okay, I still like. But over the entire week here, you haven't triggered one time into ConocoPhillips. It has never closed above the previous day's high. And what you're looking at here is you're looking at a very strong channel right there at the highs of those days. And so here on Conoco, it was on the report from last week. We like it. I still like it, but I'm not into that trade because it is never once confirmed in that trade. And for me, I would need to see a close, not to test it, but I would need to see a close above these intraday channels we've had this week. And if you'll look at that, guys, you're looking at a 30-minute chart here. This is this week. How many temps? Day 1, day 2, day 3, for the first 3 days, it hit its head on that channel, came right back down. So for me, Conoco's still justifiable to put on the watch list, but you shouldn't be in the trade because it certainly hasn't triggered yet. And just because it hasn't triggered this week doesn't mean it's not a good trade next week. Keep it on a watch list. Wait for that close above those levels, and that close would have to be above the interday resistance channel.
Let me say something about COP here real quick. COP's the kind of setup that I love keeping on a watch list for a couple reasons, guys. I know exactly where to get in, and I know right now is not where you get in, so I have clarity on what to do. Okay,
it's an easy trigger.
An easy trigger and trading plans are very, very. They're attractive to me. There's no question about it.
Cody Potter, I was going to point that out as well. Even if it triggers Monday or Tuesday, you can't make the trade because of earnings.
Got
if
a
it would
quick
have
one.
this week, you could have done it.
Yep.
You might quick 1 to 2 day trade, but not for a swing trade perspective.
Probably not.
Helmrich and Payne here, same problem we had. Here's right here. Never got to close above that 70 trigger, comes all the way down to the 200-day moving average. You have to adjust with it. And that doesn't mean it's not a trade here, Tim. That doesn't mean it's not a trade. It's right there on the 50-day moving average, right there on the 200-day moving average. It just didn't trigger, right? So triggering is so vitally important in this because it tells you when to get in and when to get out. Here on Eli Lilly, here's it 1, 2, 3, 4, 5. Okay, so here we're looking at it this day. Doesn't trigger. Should be in the trade 2 days ago. Wednesday was your trigger. Would you agree with that one?
Well, yes. Go in a little tighter on that one though, because there's a couple of different areas. You could have probably 1, 2, 3, 4, 5. You could have triggered on Monday, don't you think?
You could have triggered Monday or Tuesday if you're aggressive, but if you're conservative, it would have been Wednesday.
See, and I guess maybe for me, I don't need it to close. I need to show strength above my trigger point, and I'm going to play it intraday.
The difference between the aggressive trader who uses intraday charts to trigger, we've talked about that a lot in the past, versus the conservative trader who uses daily charts. There's just in triggering techniques. Here on MKC, here's 1, 2, 3, 4, 5. MKC triggered on Monday. It then broke out on Tuesday. It then ran. So you should have been in that trade, easy trade on Monday or Tuesday on MKC. PCG, little bit of the same type of situation, triggered earlier in the week. Now it's kind of approaching that resistance channel. So when you're looking at those reports, guys, realize that the trigger is always going to be very, very similar here. You got conservative entries with closes above the highs of the previous day. You got aggressive entries that, we just like to see a test above those levels, and then we'll drop it down into an intraday chart to place our trade. And then you have the breakout channels. And on 3 of the 6, they triggered earlier this week. On 2 of them, they haven't triggered at all. And on 1 of them, when they did trigger, they were too close to the resistance channel.
And the reality is proper triggering, entry, and management would have made you some good money on that list this week. There were enough good runs on the ones that confirmed, and the other ones that didn't would have been sitting flat. That's swing trading, guys. That's the reality.
Very good question. Is it too late on MKC? That's a very good question, and it's a question that traders have asked themselves over and over and over again. Tim, in this market environment, if you're 1 to 2 days late on your trigger, it's too late. So I would say it's too late here. It's already ran too far, too fast. Wait for that next setup. And I promise you, it will always happen. Wait for the retracement now.
Yeah. Swing trading, you got to catch the day of the perfect confirmation. At the very, very latest, maybe a day after for double confirmation on some scenarios, Matt. But if you're 3, 4, 5 days late, you're not swing trading, you're position trading. There might be a way for you to make an argument for MKC, but it's not in a short-term trading scenario.
A position. If you're position trading here and you're looking at the next 4 to 6 months, yeah, I mean, it's still go time, good trend, good pattern, all that jazz. But when you're short-term trading and you're talking the average swing trade is about 7 days, you get into it 3, 4, 5 days late, there's not a lot of room there.
And let me just give you the symbols on the bear list. You can kind of go through them one at a time as we're looking here. WFC was on our bear list, same kind of triggering idea. It just went up. Guys, I mean, when we were looking at WFC, we were looking for a breakdown post earnings. It actually has now kind of gone back up into a consolidation. There might be a further trigger there in the future,
No,
but it did
no
not trigger
trigger.
this week. WDC, and here's a great example of where you may need to update a trigger. Now, I still personally think it's got to clear the lows, Matt. You could have a discussion about it. Have a little bit of a pivot point here developing, but it has not triggered yet. Should not be in that.
We see it a lot. We saw it on Facebook earlier this week, right? Okay. And so before I look at Western Digital, let me look at Facebook very quickly. So here's Facebook. Okay. The trigger coming into the week for us in the scouting report, and if you look at the options report, was a close below 150, correct?
Mm-hmm.
That was the trigger. Now, obviously, we did not get that close under 150, right? Price appreciated back into the 200, back into the decreasing 20-day moving average, and then the trigger was either on Wednesday or Thursday. Both you and I got into the trade on Wednesday. I think Cody did as well. It would have been still a good trigger on Thursday with the downward movement in price because the pattern changed here.
Mm-hmm.
We were looking at a breakdown. It retraced instead. We played the retracement here, and we looked at that on Wednesday and Thursday in the halftime report. The reason we were looking at a trigger under 150 is because 150 is kind of like 250 for Tesla is a very, very important support channel. And that still is a very good trigger underneath that 150. But the options report was a trigger under 150 coming into the week. The pattern adjusted. Then on Wednesday in the halftime report, we went short on Facebook coming into it. So as the pattern changed, we simply just adjusted our trigger to a retracement trigger versus a breakdown trigger, right? That's the only thing we did. But when you're looking at Western Digital here, Tim, Western Digital's pattern changed, but it didn't change to a bearish retracement. It changed to a basically a descending triangle or an inverted cup and handle. And on a descending triangle / inverted cup and handle, which are continuation patterns, the trigger isn't the retracement, the trigger is a breakdown. So on Western Digital, because it triggered into basically a continuation pattern, you got to wait for the breakdown on Western Digital, and that breakdown would be right around 50, right underneath 53 and a half, somewhere in that capacity. So both of them changed this week, both Facebook and Western Digital. But because Facebook triggered in, or the pattern went into a bearish retracement, we simply did our bearish retracement techniques. Western Digital went to a continuation patterns, wait for the breakdown.
Well, and WDC actually would come off of my short-term swing trade list because of earnings on the 25th as well. That watch this management, something I do every weekend, and WDC will go right back on the list, I'm sure, right after, because it's been a very, very good tradable stock for a very long time. Just didn't trigger, and on the course of a weekend, when I set up like 10, 15, 20 trades on a watch list for the next week, I might get 7 or 8 triggers, maybe 10. I don't know. You never know. You have to let the market dictate what your trading action will be. You plan, you prep.
Averages. Let's say
half, maybe. I don't know.
I would say 50%.
Yeah.
I'd say 50%, and that's fine.
Yeah.
It's a good number. But you look at those. You look at the options report from last week. There was about 50% trigger on that.
4 more stocks on the bear list that I want to look at. CLR. Sitting on support here. Still bearish.
Still bearish.
DLTR, though, here's an example of one where by definition, you had a pivot trigger yesterday, but it's not tradable. The candle, something like this is an interesting one, Matt, because the candle on Tuesday would have changed my posture from bearish to neutral because of the size.
You can't short that.
No, you can't even short it now. So you came into the week looking for a breakdown. It didn't happen. You had a really strong news-driven day on Tuesday where Dollar Tree ran like crazy. It did pivot on Thursday with that red candle, but it's not tradable because the pattern has changed.
The trend pattern changed.
Yep.
And because the trend and the pattern changed, you have to adjust it. You can't force your personality on the market. The market doesn't even know who you are.
Take a look at PSX. PSX, what a deal on this one. Phillips 66.
I was going to say if it was at 153, that'd be a weird trigger. 53, yeah. I mean, that's exactly what you do. Okay, on WDC, if you're waiting for the breakdown, you put your trigger in wherever you identified that support level. That's exactly what you did. You put a trigger in at 53. You got a stop loss above 53 and a half. That's exactly how you approach that WDC trade. You don't sit there and stare at it. You put an order conditional on a market trigger underneath a certain level on WDC. Great work on that one.
Give me PSX next, if you would. Let's take a look at that one. This one was also on the report here, and obviously you had confirmation on this, but with the gap, Matt, you may not have got a fill the way that you want.
Didn't get a fill. I had an order to get it underneath lows, and no, it gap past me.
Yeah, me too. And you don't want to chase that kind of thing.
Happen. But you don't chase the dragon. Let it go.
It does remind me as to why I like to use contingent to limits, not contingent to markets. I think traders out there do put themselves in risk when they have.
Did we do a conversation on that? Was that Monday or Tuesday?
We've talked about it a few times. I can't remember.
We looked at it in depth. It might have been last week when we were doing conditional to limit versus conditional to market. Obviously, learning, if you're new to the market, guys, learning conditional orders and OCO orders and whatnot is very important.
Yeah, for sure. And then I think there was one more stock. Let's make sure I didn't miss one. There were 7 picks on our option report. Oh, EL, which I actually still like this chart. Earnings coming up. It's got a couple of weeks though. It's not next week.
It's on the 31st, so you got a week to play here. For me here, it's a close under 125, and that's not even debatable for me.
Triggering, watch list management. Guys, use the weekend reports. In my opinion, and every trading journey is your own. You might have had a different experience on any given week. This week, we killed it, Matt. The triggers that ran like crazy, and there were a lot of really good setups.
Good reports.
Yeah, there's a lot of information on those reports. I understand that.
Very, very quickly, Tim. As I'm down on the, and it's ABOC is what it is, but as I'm down on the gun, shooting some guns, target practicing, clay pigeon shooting, I'm going to picture you as I'm shooting one of those clays just because you made fun of me earlier today.
Okay. I mean, that seems a little dark and violent. I don't really, I get it. Say la vie, brother.
Seems very dark and violent. My God.
Question my manhood. I don't feel good about this.
I still have never seen you load a gun, so I would love to witness this. Have Tanya take a video.
How many times have I asked you to come camping? And you balk all the time.
Camping's not shooting, dude. They're different things.
Really?
Yeah.
Well, why would he go camping with you now? You just said you might shoot him.
I'm not going to shoot
in the middle of the Utah desert.
I'm a peaceful individual. I said I'm going to picture him.
All right, my friend.
But I will say, Tim, the scouting reports are vital for those pro members, guys. Okay, it was vital for those pro members. Make sure you're doing your homework on Sunday, on Saturday or Sunday, preparing for the marketplace. And as a reminder, guys, for those pro members, we are doing a special mini class on Technical Analysis 101. So guys, if you are new to the marketplace and you struggle sometimes with the lingo of technical analysis, trends, patterns, support, resistance, all of the candles and all this jazz, and we are putting on a 2-day mini course on Technical Analysis 101 for the pro members. That's just a little value add that we're going to do for the pro members. We're going to do it on Sunday as well as Wednesday of next week. And if you'll just come to any web page here at Tackle Trading, you could always see the upcoming event calendar. And as you can see, scouting reports here, Technical Analysis 101 there, Coaches Lounge. If you're a pro member, all you got to do is click on it and it'll take you to the link for that.
Couple things just as a way of reminders as well. You've got some major companies with earnings Monday, Tuesday, Wednesdays. Check your earnings calendars on all of your trades. On the weekend, do all of your prep and analysis, but also like Matt is showing as an example, and I'm going to do as well, go spend time with people that you love and you care about. That's what trading should be providing for you, is those opportunities to do that kind of thing, guys.
Well, and very quickly, the great technician, and when I say that, I mean he is a great technician, one of the best technicians I've ever been around with. Noah Davidson will be. Coach Noah, you guys all know and love Noah. He's going to be one putting on that Technical Analysis 101.
Hey, I got to tell you, this is a very nice comment, Monies. This is going to give me a big smile for the entire day.
Monies did me too.
Said, I've learned a ton this week, guys. Your show is amazing.
Appreciate that.
Just wait until I get to take this hat off. This hat reduces my IQ by 5 points. So wait for it, Monies. We're going to get there.
That hat is so bad.
Is there anything on the economic calendar next week that's really got your eye, Matt? Let's take a peek at the Forex Factory.
I was going to to say this. I haven't said it yet. Housing data, another housing data came in today. We've had 6 months straight of decreasing existing home sales. I'm very concerned about housing, and I didn't look at the charts. Let me quickly look at the charts here. XHB, this is the home builders breaking down, running extremely weak here. That's momentum to the downside completely. You also have XLRE now, Tim. XLRE, the real estate trust here, showing a little bit of strength, but coming straight smack dab into a decreasing 200-day moving average. I'm looking at this next week as a potential short. Once again, give me an inside candle, doji type candle, downward moving in price. Keep an eye on that. Put it on your watch list.
I love it.
Next week, advanced GDP comes out.
Advanced GDP.
I'm looking at that. I actually think internationally there's more important stuff going on. The Bank of Canada, we'll have to check in with old Coach Holmesy. In fact, Cody, invite Coach Holmes onto our show on Wednesday, because the Bank of Canada has their rate statement, Matt, and it could be moving the Canadian dollar that day. You also see some information, the euro. The ECB has a press conference on Thursday. Draghi should be coming out and doing some things. He has testimony on Friday as well. So,
what's Draghi going to say? We're going to print more money?
That's his MO.
We don't like Italy. We're good with Greece now, but we don't like Italy now. Is that what Draghi's? Get out. Draghi's a joke. Very quickly, guys, GDP data next week. That is important. That is the advanced GDP report. That is the one that you got to watch. It's not, there's 3 GDP reports. The advanced one is the first one. It's the most important one.
And before I leave for the day, NASDAQ is actually settling in. Looks like that doji is holding for now. We got 2.5 hours in the trading day, guys. Trade with caution, trade with profits. Learn, trade, connect, succeed. Right, Matt? That is our MO.
That's tackle trading right there. Guys, Thank you so much for being the best part of tackle trading. Brandon, yes, Tim. You can give me that hat. I'll go shoot that hat down in the desert. That's what I'm going to do.
Nope, I'm wearing this hat. I like it. No, I'm gonna.
Anyways, guys, love you guys. We'll see you on Monday. Check the reports.